I'm Angeline Ong, and welcome to your look ahead to Tuesday, the 30th of January. Now, we start with Japan unemployment rate. That's the key indicator we're looking out for there. Expectations for December, 2.5%, unchanged. Let's have a look at France as well, because it's the Q4 GDP growth rate in focus there. Pretty much unchanged quarter on quarter. And in Germany, it's the fourth quarter GDP growth rate, first estimate negative 0.3% quarter on quarter expected. Now, what's also key about this index, or rather showing you the EU Stocks 50, is like many of the others, it's seen that climb since October, but since petered off, and then since mid-January started a new climb upwards there. This could change given what we hear from the Fed and also the Bank of England this week. The Fed expected to maintain its key interest rates at current levels. So is the Bank of England, really. But it's what they say about the future trajectory of interest rates that could mean a change in the markets, not just in the US, but elsewhere too. Just to remind you, the CME Fed Watch tool forecasting a 59.7% chance of a Fed rate cut in March, but due to very strong numbers out of the US in terms of economic data, we've seen that percentage being dialed back. We've also got JOLTS. This is the jobs opening figure and consumer confidence out of the US and API crude oil inventories. But really, the thing that steals the show this week will be earnings. And it is a huge week for earnings, starting with Diageo, S3, which specializes in recruitment in the STEM area, Pets at Home, and Diageo as well. I think I mentioned that. But the real scene stealers are from the US. Microsoft out with second quarter earnings. Now, Microsoft, if you remember, recently unseated Apple as one of the biggest companies in the world, if not the biggest. Temporarily, it unseated Apple. However, this week we might see further surprises from Microsoft. It's expected to report a 15.8% jump in quarterly revenue. Now, if it achieves this, it'll be the best growth it's seen in nearly 2 years, as rising adoption of its products infused with generative AI fuels demand for its cloud services. Now, it's early days yet for AI, but if it does take off, the thought process is that it will be Microsoft who's been ahead of the pack with all these generative AI type services that's likely to cement its lead in this space. The software giant, as I mentioned earlier, recently snagged the top spot with a valuation of $3 trillion, toppling by a small margin Apple, meaning it was the most valuable company at that point. Also, AMD is another big one that we're watching out for. AMD out with fourth quarter earnings, expected to report a 9.3% rise in revenues to around $6 billion from $5.6 billion a year ago. This is according to data from LSEG. But what's key is to keep an eye on what it says about these special chips that power AI and are super fast. There were headlines earlier this session saying that the US is looking at plans to increase the production of these. And in terms of further earnings that we're looking out for, Alphabet, fourth quarter numbers, General Motors also out, and Pfizer, 3 titans there. Alphabet expected to report a 12.1% rise in revenues to $85.3 billion from $76 billion a year ago. This is according to the mean estimate from 30 analysts based on LSEG data. Of course, what will be key as well is to watch out for any comments about the adoption or the usage, rather, of artificial intelligence tools, and of course, its spending on its cloud services. Any guidance, of course, will be pounced on because everyone's still trying to figure out how to make AI and AI services pay. And that's it for now. For more market moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. IG's Jeremy Naylor will be doing the same at 7:30 on Early Morning Call ahead of the European market open. Follow me on Twitter at Angeline Ong. This is IGTV.